This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachardis. Thanks for joining us at S&amp.com. As widely expected, the Federal Reserve raised interest rates by 0.5 percentage point and announced that the balance sheet reduction process will commence in June. There was a lot of speculation ahead of the event that the Fed would consider even larger rate increases of 75 basis points, but Chairman Powell shut that down. Fed chief stressed the committee is not actively considering 75 basis points hikes and said that rates will likely be raised by 50 basis points at the next couple of meetings. Markets were pricing in 50 basis points moves at each of the next 3 meetings, so this was a much softer message than feared. Overall, this was a classic case of the market overpricing the Fed's trajectory, with Powell essentially saying that shock and awe rate hikes are off the table and opening the door for a slowdown in the pace of tightening after the summer. He made it clear that his Fed will prioritize avoiding a recession over vanquishing inflation. This gave investors the green light to load up on riskier assets, propelling the S&P 500 higher by 3%, with tech shares leading the charge. The mighty US dollar finally took a step back as traders realized the Fed won't go into overdrive. Euro-dollar rose by one big figure, most likely on profit-taking and short covering, rather than any profound changes in the fundamental outlook. There is clearly some relief across the FX complex that the Fed won't throw caution into the wind when raising interest rates. And with the ISM surveys pointing to a disappointment in tomorrow's U.S. employment report, the dollar could remain on the back foot. However, an outright trend reversal seems highly unlikely, while every other major region is flirting with recession, much more so than America. With the Fed's not-so-hawkish stance knocking the wind out of real yields and the US dollar, gold prices finally breathed a sigh of relief. For now, bullion will likely remain hostage to any shifts in Fed pricing and might even enjoy more gains if the dollar continues to surrender ground. Spotlight today will fall on the Bank of England decision, where a quarter-point rate increase is already fully priced in. Governor Bailey has been quite vocal lately about the shock to real incomes, foreshadowing a potential pause in the tightening cycle over the summer. If this cautious stance is echoed today, the pound could meet a fate similar to the dollar's after the Fed meeting, as markets are still pricing in 150 basis points of BoE hikes this year. This was today's Daily Market Comment. Thanks for joining us at XM.com.